even if you're not winning a lot, you'll find a very, very high performing system. Okay, so let's recap what we've covered here. It's important to know the expectancy of the system. It's important to have an understanding of what the different ranges are. It's very dangerous to go in and assume that if you have a system that you think is 70% accurate, that equals, for every 10 trades, you have 7 in the W column, 7 winners, and you have 3 in the L column, 3 losers. That's very dangerous thinking, because that's not reality. A 70% system over 10 or 20 trades may have 6, 7, even 8 losers in a row, and it's still, over time, a 70% system. So you've got to understand that as well. We talked about making a decision with the expectancy and playing with the money management formula, where it may seem like common sense, but the bigger position that you leave on, the more profit you are going to make. But then we also related that to the actual marketplace. What's the average range? Well, it's 140 pips. Okay. Well, if I'm taking a trade in the top 1/3 of that range, maybe I should expect to make more profit. So I'm not going to, I'm not going to try and just get 70 or 80 pips. I'm going to go for 95 or 100, because if this really is going to be the high, then my profit potential is 133. Remember that. So we took the day, chopped it up into thirds, looked at where our trade was occurring. In this case, it was in the top third, which means we can capture potentially this profit down here. So we go in understanding that if we let that second position run, or even the whole position run, we simply don't have to be right that often. So it takes the pressure off. Again, the thrust here is the decision making. Let me cap it off with this. Sometimes pulling the trigger in the markets can be difficult, and there are many, many different reasons for that. I've had various points in my trading career where it just seemed more difficult to pull the trigger than other times. It's just, that's how trading works. Trading is a 100% mental game in my mind. There's maybe 90-10, 90% mental, 10% is the system. Because the system, if it just doesn't work, you're not going to make any money. So part of this process is understanding, I think, the risk, and really getting to the bottom of, what will happen? What will happen if I keep screwing this up? Or what will happen if I just don't win as often as I should? Or what happens if I take 5 losses in a row? All of these questions can come up. Because the market will quite frequently throw us curveballs. So hopefully you've seen here how we can use the expectancy spreadsheet as a tool